Hello and welcome to the Investor Master Series. My name is James Boyd. Welcome to all. We got in the chat Scott Luck from Hawaii says aloha. Aloha back to you. Will W, hello to you. Hannah Merningham says spank you very much. She's a funny one, so she's lively, so be careful there. Hannah, hello to you and family. Okay, hopefully you're doing well. BJ, Dom, Elena, and Naresh, and many others, welcome to all. Now remember that this, we also have Barbara Armstrong in the chat, a fellow instructor. So many of you know Barbara, so she's with us. If you have questions, go ahead and type those in the chat. I'll be looking for those questions as well. So Barbara and I will tag team right on those chats, and we'll look to answer your questions live as we go here. Now this class, Investor Master Series, we talk about stocks, talk about options, technical analysis, fundamentals. We try to bring it all together. This class is really more intermediate to advanced. It doesn't mean that someone that's brand new can't come. It's just we're not going to really be covering very basic concepts. Now, if you have a question on it, we'll address it, but we want to kind of make it more intermediate to advanced, okay? Because many of you are, okay? We want to make sure you have a place that you can go to. Now, and that's what this class is. Now, remember that when we talk about stocks, but if we talk about options, which occasionally we will, remember that options carry a high level of risk and are not suitable for all investors. You might be thinking, well, what type of options? Well, we'll talk about covered calls, cash secured puts, verticals, right? Callers, nothing that is like super advanced options. So we'll kind of stay to some of the basic options, but those basic options, they're important because they can complement a stock portfolio. Now, remember when we talk about the information given, it's provided for general informational purposes only. And this webcast discusses technical analysis. There's other approaches like fundamental analysis that may assert some different views. As you go further down your investing journey, you want to really make sure you get used to like looking at the fundamentals, looking at some of the macro data like on the economic fundamentals in terms of how is our country doing on their GDP and retail sales, consumer confidence, because that can play into market conditions, and then inner market analysis, which is looking at relationships in asset classes. It's exciting stuff. I mean, stuff like on Friday, Saturday night, you're like, look, I know what I'm doing. I'm studying intermarket analysis. And that's what I like to do. Now, remember that the examples we do here today will be in the paper money account. Investing involves risk. And also remember when we talk about short options, selling calls or selling puts, the examples that we're looking at here in the US, they're American style options. Okay, so that just means that those can be assigned. You have to deliver the shares of the strike price or buy the shares of the strike price at any time up to the expiration, regardless of the in-the-money amount. Those are American-style options, not European, okay? Now, also remember, our goal with each session that we do here is talk about the market conditions. We'll talk also about some new traits we want to consider, or at least look at, for a stock and or option position. But then we also want to go back and look at some past examples that need to maybe be updated and or closed. Now, when we say close, we might roll the position as well. So our goal here is to kind of always, every Tuesday, kind of build and manage a portfolio. Now, as we hop right in here, I'm going to show the Thinkorswim platform, okay? And what I'm going to do is I'm just going to we have the left-hand side. Now, I'm going to just kind of point our eyes toward the index list, okay? We got sectors, we got the Dow Jones, and if we move down. Now, if we look at, let's say, the indexes just real quick, just kind of get an idea of where we are. Plus 32 on the Dow. If you look at the semiconductors, okay, which I include in the indexes, many of you like to see that, 22 points there, 0.4%. And if you look at the other ones like the S&P, okay, down a point, pretty much trading flat. NASDAQ pretty much trading flat. Russell down 0.3. Not a big difference, or big drop downs, I should say, in any indexes, which is going to be interesting as we'll see in just a second. Now, if I pull up the index list, I'm on the Market Watch, I'm on quotes. This is just the list itself. Now, many of you that might be joining today are like, how did you get this view? I'll show that in just a moment, but let's kind of talk about it. If we look at this, I want to ask you a question. Does anything stand out to you? Anything? So if you look at this, and by the way, let me kind of guide your eyes a little bit, okay? I'm looking at this list, right? I'm looking at that column, which is the trend column. And I'm also looking at really in the last maybe 1 to 2 weeks, the RS 5 and the 10 is really the short for relative strength. Okay, 5 days, and the RS10 relative strength for 10 days or 2 weeks. Does anything stand out? Well, first thing we kind of see when we talk about the trend, you're seeing that the trend column, you see a trend too actually on the SOX, which is the price snapping back above the shorter term moving average. Okay, so that could be interesting. Are there any stocks in semiconductors that might be getting a move? NVIDIA, okay, we'll talk about it in just a sec. Second, if we look at this, we see trend 3, price above the 10 and the 30 period moving average. That's NASDAQ. And if you look at the second one, okay, that's also in trend 3, S&P 500. Now, the one thing that is kind of interesting is you look in the last, let's say, 1 to 2 weeks, you're seeing that it's technology that is leading back, okay? Now, is that a bad sign or maybe is a bullish sign? Okay, well, if you get semiconductors and technologies like NASDAQ leading, it's not necessarily a bad sign, okay? Now, the one thing I also want us to kind of notice is on the moving average crossover column, we see the green background. Remember, that is kind of showing that the moving average, the short-term moving average is crossing bullishly, hence that green background, to the upside. So that's kind of something to note. So the big takeaway from the indexes is NASDAQ leading, okay, technology leading. The S&P 500 getting a little crossover. So we don't see something super bearish there. Now, if we look at the sectors just real quick before we talk about individual stocks and charts, we pull this up. First thing I notice in the trend column is there's quite a bit of green, okay? Now, if you look at that, things that we could kind of take away from this list, you're also seeing when you look at tech, you're seeing trend 3, which is not surprising because we just saw the NASDAQ. We also see staples, also there as well, okay? And you see utilities, also there as well. Energy, getting a little push. And what you're going to see is when you look at basic materials, okay, industrials, real estate. So those are some areas that are kind of getting a push. So I see a lot of a theme here. What's the theme? If we saw industrials, basic materials, energy, you see any theme here? Commodities, 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 okay? Now, when we take a look at this at RS5 and 10, you're going to see a lot of those movements kind of in those sectors right there. So what? Well, the investors they're always asking themselves, what stocks do they own compared to what's moving now? Because if you're trying to play the relative strength, you're trying to kind of have some of those areas that are hot, okay? Now, if you said, I don't have any positions, you might be thinking, well, those might be some of the areas we might consider in starting with, okay? Now, any questions with that? Any questions? Now, by the way, I want to kind of point something out. We talked about real estate last week, right? When you look at real estate, think of a real estate company. Could you think of one? Maybe Simon Property Group, right? That area is actually still done okay. Okay, it's there as well in trend 3. It's not as strong as some of the other areas, but Simon Property Group has not been the weak link. Simon Property Group, which when people talk about real estate, is probably one of the top ones that people think about. If you look at Simon Property Group, and I'm just connecting this to what we saw with real estate, remember I talked about last week, there's a lot of patterns that we see in here of just cup and handles or continuation patterns. And boy, there's a bunch of them. Now, I won't start here, but what you're going to notice is we kind of had this breakout there, okay? And there it is. And long lower shadows on the bottom, which means someone was buying the dips, okay? And then what do you see right here? A little close above the high of the low day. There's your green dot there showing a little what we call close above the high of the low day, or also trade above the high of the low day. We haven't closed, okay? But it's trading above the high of the low day. Now, first thing before we go in and start looking at some of these charts, okay? Now, are there any questions that you have? Let me send this to you, okay? Roy actually says, took profits in SPG this morning. All right, so let's kind of talk about this. Why would an investor, let's do start here. Why would an investor sell? Well, maybe they actually thought this was the top, okay? Now, what I want to kind of do here is I want to kind of show an example, okay? Let's imagine the investor says, a short-term trader, they're going to try to profit take at the prior high. It makes complete sense, okay? Now, if you're more intermediate, where you're trading, let's say 2 to 3 weeks to 2 to 3 months, you might be thinking we might continue to the upside. Now, the one thing we don't know is maybe was this the flag? If we look at this and kind of say, was this a little run up and the pullback and doink to the upside? Is that maybe kind of telling us that maybe the chances of us breaking the prior high might be stronger? I think we say there's probably increasing odds, okay, of that happening. Now, when we go back and look at the 3-year weekly chart, okay? Now, by the way, why do we talk about investing anyway? Well, because we're trying to get a return on the monetary assets that we have. That's why, okay? So when I say monetary assets, we're talking about savings, okay? We're talking about investable funds, okay? And if you look at this on a weekly chart, and you look at the kind of what we see here, there's a crossover, okay? Now, a lot of investors, they like to see where the weekly charts are showing a price above the shorter term moving average or both, maybe a crossover, a breakout, or both. And right now, we're kind of seeing a bullish chart. Would you agree or disagree? One of us has to be right, okay? We're about ready to find out. So let's say the investor says, you know, James, I'm going to start with a stock trade for just a moment, okay? I'm going to right click, okay, on the chart itself, okay? So I'm going to go to SPG, and we're going to do this in the IRA account. Now, we might be thinking, well, James, this looks a little high, maybe off this higher low area. I'm not sure if we could say that, okay? If I looked at this and said, well, where do we see potential support? Well, if we kind of look at where this pullback area was, we're like $2 off. I know the candle looks huge. We're like $2 off the higher low area. If I kind of measured down to the 20-period moving average, we're still 2% off the 20-period moving average. So this is why it's nice to measure, okay? So it looks really high, but when you kind of measure it on a percentage base, not that bad, okay? Now what I'm going to do in this case is I'm going to right click on the chart. We're going to go down to buy custom, and we're going to go with OCL bracket, calling all technicians. Now, if we were to set, let's say, a stop, where would you set it? If you were going to set a target, where would you set it? Now, if we kind of looked at this and kind of let me take a tool here, and what we're going to do is click on the price level. And if I click on the price level and just put it right on the 20-period moving average, we're going to set it at 178.81. Now, is that the area that you were thinking of? Or were you actually really thinking, let's say, 180? Okay. Now, if you said to yourself, James, I'm kind of thinking about giving a little bit more room, taking 178.81 less 2%. Okay. Well, here's the deal. If we took 178.81, which is where the 20-period moving average is, shave 2% off, 2% less, it's going to give us 175.23. We're going to go ahead and put that right here. 175.23. 175.23. Now, in terms of position sizing, we're going to go back and click on those pool balls, percent, dollar amount. Let's say we could put in $6,500. Well, if we could put in $6,500, it's really going to come out to be about 35 shares of stock. 36 if we round it up. We won't, we'll round down. And so I'm just going to type in 35 shares. Now, what you're now going to see is what about the target? Okay? So the reason why I thought it'd be important to kind of start with real estate is not everyone buys technology. Some people like income. Many of us might be 50, 55, 65. And by the way, you could be 45, okay? 40. And you could be flush with cash. And you might say, well, James, I want capital appreciation, but I also want maybe something that might give me an income stream. Now, those dividends are not guaranteed forever, okay? They can be raised, they can be lower, they can be cut indefinitely. But so we know that. And so the biggest thing is maybe the investor says, James, I want to kind of also have something that might be more immune to what happens in the market. I mean, at the end of the day, people need a place to live, a place to go to get health care, whatever, okay? Everyone has to have a place typically to live, okay? And so there's always some underpinning there of demand. Now, if we were to look at a target, and if I were to do this as we move forward here, I'm going to take this kind of the horizontal support level, and I'm going to take, for example, let's say this, which is the old high. If we were to measure, okay, from resistance down to support, that's going to be a width of $13. Take $13 on top of 183, and we're going to put a price tag or target right about 196. Hannah might put her paper money target right at 196.5. We're trying to sell ahead of when Hannah in the paper money account puts hers at 196.50. Now, I ask, this is not a recommendation, but I ask that you paper trade alongside us. That way, when you come to my class, you can actually follow along and say, yeah, I've done those same trades. Let's talk about those, okay? They're not recommendations, said that twice, but it's the best way to learn together. And that's really what we want to do. So let's go ahead and go confirm and send. Now what we got right here, we're buying the shares of stock. Notice there's no options here, okay? No expiration, no strike, and it says stock 3 times. So we know this is a stock trade. It's a paper money trade, okay? So it allows us to learn. There's the capital involved, not a commission. And what you're now going to see is the stop. The stop, that's the stop price that you type in. That's what we call the activation price to sell. We don't know what it could sell for. It could sell for that price or lower. That's the risk of a stop, okay? And with that understanding, we're going to go ahead and say send the order. Now, I'm going to kind of, yeah, Hannah is, you know, she's a tennis player, pickleball player, and yeah, don't ever, if she says $20 a game, just don't do it, okay? Now, here's the thing. So notice that limit order, as we were talking, when I right-clicked on the chart, it was a little less than where it is now. So we need that price to come down. Now, we can move these orders around on the chart, okay? Do not click on the X. You click on the X, it cancels the target and the stop and the entry. But if I said, look, I want to get in a little bit, I can just click on that and drag down, drag up, and I'm going to buy and sell right on the chart on a stock trade, okay? Now, I moved it up to kind of where the price is now. There it is. I'm just going to say this. Keep an eye on some of the real estate stocks. That's all I'm saying, okay? Now, I also want to go back to, for example, we talked about the basic materials, okay? Let's go back to this chart for just a second. So one of the areas, let's kind of look and see what the basic materials looks like. Why did basic materials come up? This kind of goes back to macro analysis, right? Well, the White House, I'm not trying to make this political, but it's just like, hey, there's news out there, right? So there's been tariffs that have been placed, or at least talked about placed, on foreign steel coming in to the US, 25%. So what's one of the groups in basic materials? So if you said, James, I don't have an earthly idea. Well, let's kind of help make sure we do have an idea. So I'm going to go back to just scan real quick. And if I go to scan, we're going to go scan in, and then we're going to go to by industry. So if you said, geez, base materials is getting a little push here, what are some neighborhoods in this space? So we went to scan in, and what you're going to notice is we'll just go down to the bottom and we can see materials right there. So this list right here is sectors, of course, right? Materials, when I put my cursor on that, that's going to be the industry. You got chemicals, construction materials, containers and packaging, metals and mining, and then you see paper and paper products, forest products. Well, when you look at metals and metals mining, there's where we actually have aluminum, okay? Sorry. Spent time with a guy from England on Saturday, okay? Copper, gold, precious metals and material, silver, steel, hello. Okay, good. Okay, we're all in the same space. So that's kind of the one we want to keep an eye on. So why do you keep track of kind of some of the news out there? Well, it could kind of make some investors trade to what that maybe news might mean for a group, okay? Now, let's go back to this. If I said to you, Name any stocks in the steel space. Well, let's do this, okay? What if I actually said, I'm gonna go back to metals, go back to the industry, materials, and let's go to metals and mining, and let's go to the real quick steel. Now, this is just looking for any stocks in the steel space, okay? Looking for anything, stock price above 40, volume $500,000 or greater. Nothing else. Just hit me with the scan. And there's two stocks that actually come back that are getting a little bump, okay? Now, so if you look at this, one of the stocks, NUE, we have that position. Let's take a look at these and we'll look at our position. When we look at NUE, what does it look like? Well, that's what it looks like, okay? Now, are we at an area of resistance? Yes or no? Well, if we go back and take a look at this, you're gonna see that kind of we came up to this bottom area. Now, who was the person that on SPG talked about they sold the stock at resistance? Who was it? Okay, who was it? Okay, now if you're a trader, you might be saying, James, we're up near an area of resistance and I'm gonna sell. Let's show that example. And then what I'm gonna do is kind of think, well, if we sell here, what might be the path of least resistance? Well, if we break this level, this now breaks inside this old channel. Saying that word every day maybe makes some technicians happy. So if we break inside an old channel, it was Roy, and I'm glad he piped in there. Yeah, so maybe a shorter term trader general, decides I'm going to sell. Let's look at our position just a moment. Could this stock break inside this old channel? It could. So let's kind of talk about profit taking on the position we have. Do we have enough gain? But then second, setting up another order that if it were to push up inside this old channel, could it go to the top of the channel? So when we're talking about economic news, okay, we're talking really about macro analysis, GDP, retail sales, consumer confidence. It could be economic policy, monetary policy, all of the above. Those things can have an effect on which industry groups, which sectors could benefit from the policies. I'm not trying to bore you to death, but that's just the truth. And also there's, for example, some areas that can be hurt by the policies, okay? Now, what I want to do is let's go to NUE. Let's look at one of our positions, okay? Where is it, okay? So when I look at the position, do we have NUE? Oh, right there, right in front of my face. NUE, what do we have here? Now, in our class, we don't want to just talk about new positions solely. We also want to talk about, do we have existing positions? Just so happens that we do. Now, we have a long call, an option, okay? We have the March 125 call, and we have the 130. I need some help here with kind of managing the position. Now, what do we have here? Now, how much did we pay? Well, we paid $9 because we bought it, and then we sold the 130 and we collected that. That should make sense. If you buy something, you got to pay for it. And if you sell something, you collect. Well, the net of those two transactions, if we look at that, was $2.75. Now, that's per contract. We have 3 contracts, okay? So we need to take 275 times it by 3, and this is going to give us the maximum gain for 3 contracts. Answer. It's going to tell us, look, we got $825 is the maximum gain we actually have for the 3 contracts. How much are we sitting on now? 360, 390 as it's moving. So we're sitting on 47%, mama mia, almost 50, okay? And we're sitting at 47%, I'm right here, and we got 38 days left. Now, I don't know about you, but if you have like a gain of, let's say 50%, and you have that much time left, that's a huge gain. That's like having an 80% gain with less than 20 days left. That must have meant that the entry on this was solid. Now, I'm not saying it was me that did it, but let's go back and see where this entry got in. And if we're going to profit take, it was on 2-4. So we just clicked on the profit or loss, saw the date. Let's go back to the chart and let's look and see what we could do here. So on this one on NUE, Where was 2.4? 2.4 was right there. Now, I'm not going to say we nailed the bottom, okay? But it wasn't horrible, okay? And if you look at that, that's where the entry was on the right-hand side. And then what happened is just kind of day by day by day by day, it just kind of grinded to the upside a little bit. Price, we probably got in at 130 in the last, let's say, week or so. It's gone up about $10, but who's counting? Now, let's say the investor said, James, I'm going to sell. So how do you sell? We're going to right-click on that, on those lines. Right-click. Create a closing order. Sell. Now, when we sell this, our thinking is maybe that stock pulls back a little bit, okay? And we're going to set an alert. If it gets inside that old channel, let us know. I'm going to say sell it. We're going to try to grab the profit. Now, James, you're such a cheater. I thought you'd only had one position. That's funny, okay? No, we don't have one position. We have two positions. So this was the position we were talking about, but we also had a short put vertical as well with a different expiration. And do we need to close that as well? Answer. On a short put vertical, look at the short strike, the strike that we sold, and look at what it was sold for, and look and see where it is now. The closer that short strike is to zero, the more you know you have near maximum gain. If we look at kind of what the maximum gain is, we can only get 100%, and we're sitting, literally sitting, okay, on about 97% of the maximum gain. We're going to take both of these down. And so now what I'm going to do is I'm going to go ahead and actually bring this up, okay? Confirm send. Now, I'm also going to, while I'm here, might as well, I'm going to right-click on those lines, create closing order, buy. How do you highlight both lines? Just hold the shift key down. Hold the shift key down, okay? Hold it down, and then click on that, and then you highlight both, and then just right-click on that. So we're going to try to profit take. That was about $725. We're going to see if we can get filled. Now, we cannot assume. Do not call any friends and say how smart we are. We have not gotten filled yet. Okay, this is not we're going to the grocery store and we booked the profits. We haven't gotten filled yet. We didn't book anything. We put the order in. We'll give it 2 to 3 minutes, see if it fills. If it doesn't fill, we're going to adjust the price. Now, what I'm going to do is I'm going to set an alert right above. I'm going to set the alert maybe right around 142 and change, okay? Now, if you set an alert, that does not mean you're getting in. An alert is alarm clock. It's just like my Ring doorbell, okay? Not a recommendation, okay? But if I right-click on the chart and say alert, we could say create an alert if it goes at or above a certain price, which you can specify, or we could say if it gets at or below a certain price. If we're thinking the stock is going to go up, we're going to really say at or above. All right. Now, what I'm going to do is I'm just going to type in 142. Now, if we get above 142, it's now breached resistance. Okay, so what fills? The call spread fills first. Put spread's still out there. Now, you might be thinking, I'm going to call my friend now. No, you're not. We're not calling anybody, okay? We're not done yet. So now if you take a look at this, if it gets at or above 142, create. And now what it's saying, if the mark, think of the mark as just the stock price, okay? The middle between the bid and ask price. If that mark price, stock price, gets above 142, let us know, okay? And if it does, we could go back and revisit maybe a re-entry and try to play a channel trade. A channel trade, in this case, is nothing more than a break of resistance to try to get it to go up to the next level resistance. That's all it is, okay? Now, are there any questions with this? Now, James actually says, why not just close the short put and let the long put run? Woo-hoo. Okay, now, big boy conversation here. James, JP to JB. So one of the things that can happen, if we went into this and said, why not just close the short put by itself? What it really comes out to be is we're leaving the long put out there. The long put, the risk there, if this stock were to suddenly tank, if it were, okay? If it were to suddenly tank, that long put can then become short shares of stock. Now, we might say it's a very, 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 very low probability, but sometimes that low probability happens. So if we can sell for a nickel or less, it's commission less. What we're saying is we just want to get rid, I don't want to think about that anymore, that's still on the table. I have seen that happen before, and it doesn't take but one or two times to cure you of leaving those long strikes out there and saying, there's no chance, and then that no chance happens. That's all it is. And we're saying we don't mind to sell it, because if we can sell it for a nickel or less, okay, it's commission less. That's all it is, okay? We're just trying to kind of button up and make sure there's no pending potential trade out there. Remember, long puts can morph into short shares of stock, okay? Now, let's go to the next one. I want to go back to just real quick. So when we talk about the steel for just a moment, okay? So when I look at the steel, so NUE, we talked about profit taking and then set an alert. When I go back to the scan, the other one that comes up is STLD. And if you pull this up, that's what this one looks like. Now, if we looked at the STLD and zoomed in on this, where do you see resistance? Where do you see it? Well, if I looked on this and kind of said, where do I see resistance? Now remember, imagine you had a ruler or a level in hand. And I went into this and kind of said, I kind of see multiple touches, maybe right about right here. Okay? Now, if you zoom over on the right-hand side, we're going to see that there's trying to be a moving average crossover. Now, if you said, James, I think steel is going to be pretty bullish here. I think the U.S. steel companies, if we kind of shun to some degree some international steel, some of the U.S. domestic steel companies might benefit from that. In other words, they could sell, they could produce it and sell it. They might even sell it for a little higher price, perhaps, maybe. Now, wonder if the investor says, I want to try to get in the steel space and think that this might go to the upside. Now, we know that if you pick a stock trade, that's the most bullish trade you can do. It has a delta of 1 to 1. It's also the most capital intensive, okay, which I don't even need to explain. Now, what I'm going to do is I'm going to come in here to the trade tab on STLD, and I'm going to do a strategy that's not as sensitive, okay, initially to price movement, okay? Now, this is kind of where options can help or potentially benefit a stock portfolio. Now, when you think about selling pets, okay, it's really an income strategy, but it's also a potential stock buying strategy at the strike price. So what I'm going to do is when we go to the trade tab, we're going to consider doing a trade. What trade do you want to do a trade on? We're going to type in the symbol, press enter. We get the stock information up top, check. We got calls on the left, puts on the right, and we have strikes, 115 down to 150, okay? Now, if we take a look at this, we're not doing the calls. We're going to come here to the puts. Now, if we look at the put side, okay, we're talking about selling a put. In just simple terms, selling a put is where whatever strike you pick, you're really saying, I think, or I want the stock to stay above a certain strike price. The strike that you pick is also the strike where you're saying, I would not mind in owning the shares at that strike price. Now, this sounds nuts, okay? But when you think about this, if this stock is at 134.84, some investors might say, I don't mind to buy the shares at 130. Well, now remember, if you sell that, if we just right-click on that 130, sell, okay? And I'm going to go to vertical here. Why are we doing the vertical? Well, there's a simple reason. Well, one of the risks of cash secured puts is if you sell the put, they can assign those shares at any time from now to expiration. But what that means is we would become a buyer of the shares, 100 shares, because there's one contract. But if we did have to buy the shares, they still have to give us all of the premium, even though we're not at expiration. Okay? So sometimes that's not necessarily horrible. Now, what I'm going to do is I'm going to buy the put below. Why? Well, if we sell the put at 100, okay, the risk is the stock could go all the way to 0. Some investors might not like that. And so what they're saying is, can I buy a put? Can I buy something to the downside, just in case? Now, when you buy a put to the downside, a lower strike, you're just saying, I want some protection. And you're just saying, look, I'm going to pick example given the 110. All right. So if we come in here and say, look, I'm going to buy the put at 110. What does the 110 give you the right to do? Well, when you buy a put, it gives you the right to sell. So let's now put this together. You sell the put, you have an obligation to buy from now to expiration or expiration. So we have an obligation to buy at 130. We have a right to sell at 110. So the risk is not that it can go all the way to 0, because we can sell at 110. Not theoretically, not a maybe, not a depends, at 110. And that is huge. A lot of people say that, stock trading, you could set a stop. Look, stops have risk with them too. Why do people buy puts? They buy puts because they want to know definitively where they can sell it at. Now, who's on the other side of that trade? Someone that sold the put, okay? We could sell them the shares at 110, okay? Give them to them at 110. They'd be the buyer, we'd be the seller. That's a huge deal. Don't even make me go off on that tangent, okay? Now, I'm going to tell you right now, there's a lot of people that have invested for a long time that have never really done puts. If you've gone through markets like early 2000, 2007, 2008, a lot of us have had a lot of experience with puts, not just from an academic point of view either, okay? So, and by the way, just because people talk about it doesn't mean people trade them, okay? So I'm going to tell you right now, puts in this account are important because we want to have defined risk trades. Now, puts could be something done with a couple strategies. You could buy the shares and you could buy the put. It's called a married put. You could do a cash secured put and you could buy a put out of the money. I call it really a short, wide put vertical. Or you could just do a short vertical. Those are 3 different ways in which the investor could use long puts as a way to protect the obligation or the shares that they own. Now, or you could just buy a put in general, which we don't show a lot of, okay? We're going to go, there's the credit, less the commission. Send the order. Now, wait, is this properly position size? Well, now remember, that max loss is assuming we close all the way below both strike prices. Now, I'm going to assume that we maybe do get assigned. I'm not going to stretch this to like 2 or 3 contracts, because if we were assigned, that is still about 10% of the portfolio. Now, if those shares were assigned, what does that mean? We're a buyer of the shares at the strike price. Does the investor have to hold on to them? No. Could the investor try to sell some? Yes. Could they try to sell all of them? Yes. At that point in time, you'd have to check the liquidity to see if you could sell them, okay? We're going to go ahead and send the order. There you go, okay? Now, the other point that Greg brings up, great point here. The margin requirement is less. That is true. Given an IRA, yes. So that's why a lot of people in an IRA like to buy a long put too, because it lessens how much money the investor has to set aside. Now, what I want to do is just real quick, I want to kind of show you something. Some of you today might be brand new and think, geez, do you do this every week? The answer is yes. You could join our group. How much is it to join? Okay, well, if you call this number, no, I actually don't have a number, but you could actually go to youtube.com. All right, you could just type in Trader Talks Schwab Coaching, okay? And what you're now going to notice is when you type in Trader Talks Schwab Coaching, okay, you get to this page. And this page, you're going to see that what is on this page? Well, it actually has our live class right now. So if I resynced it, you're now going to see that this Investor Master Series, it's live right now. Now, you don't have to be on a computer. You could be on a phone. You could be on a tablet, whatever. Okay, you can still get it. How much is it? A nice round number. How much? 0. Okay, so you're really investing your time to learn. Now, also remember that when you go to videos, you're going to also see that we have some latest videos or popular, etc. You have which one is live okay, live, or playlist. And these are classes. So if you said, I like to learn about price patterns or index options, or what about swing trading? Or wonder if I was just getting started with technical analysis. Or let's say I want to start just learning with how do I trade options. They're in a playlist. And a playlist is no different than watching your favorite show on TV or whatever your TV and saying, I want to watch the latest episodes of that TV. So the playlist is your favorite show, and the playlist has the episodes. That's all it is. Now, the last thing I want to say before we look at our other example is if we go to this page right here, make sure that you save this page for sure. And by the way, one thing I want to make mention is if you said, well, do I have to find this all the time, or could I just subscribe to it? Absolutely, right in the middle of your page, you can subscribe for free. So that way, when you subscribe, anything you subscribe to doesn't mean you pay for it, in our case. And you'll see anything you subscribe to will be on the left-hand side. So just subscribe. Simple, easy thing to do, okay? Now, the other thing is, at the very top, I'm going to go to Schwab Coaching Webcast. I sent the link out. And on this page, you're going to see that it will say Overview, okay? It will say Live Webcasts and Virtual Workshops. Now, the one thing I want to make sure you're aware of is we have a calendar. So if you said, hey, could I go and see when other classes are happening, when Barb is teaching and so on? Sure, okay? So here we are on February 11th. And if we said, well, what other classes are happening today that you can see? Barb will be on at 2 p.m. Eastern today, okay? And if you said, well, what about tomorrow? What about the next day? And so on. There's the schedule. Now, the other thing is, just real quick, is you're going to also see on-demand webcasts. These are recorded, okay? And if you said, well, do you have in-person events that are live taught to you in Miami, Nashville, Dallas, Houston, San Fran, San Diego, Denver, you name it? Yes, we do, okay? And it's just on that other tab right there. So make sure that you take a look at that. Some of you might not realize, geez, I never knew this was here. Well, that's where we're doing these sessions, okay? All right, good. So I have nothing but good news here today. That's all I do. Just go around and share good news. Now, I want to go back to NVIDIA for just a second. Okay, now why are we talking about NVIDIA? Yeah, you guys remember that DeepSeek thing? Okay, now I want to bring up something in our last trade example just real quick. We'll do one quick. You guys remember when CrowdSeek released software and the software had some glitches and a lot of people got stuck at airports? Okay, you remember when that stock just tanked? Remember when it tanked and Delta came back and said, we're suing CrowdStrike for $500 million at least for damages? My gosh, that was like a gift. Okay, the stock has only gone up 100% since. This is why when I pound the table, sometimes news, bad news, is not necessarily bad news forever. Someone bought into that, and that bad news, price causing the price to drop, created an opportunity. Now, I want to go back to this. Let me kind of go back to what I was saying with NVIDIA, okay? I want to kind of draw that same line, okay? We saw that kind of DeepSeek came out. DeepSeek said they created the same thing for $5.6 million with two guys in the basement, okay? And I'm not sure if it was in the basement, but let's say it was. But they just said that, hey, we could do the same thing as many of these other companies that have done for billions with only 5.6 million. There's many of us here that today might have 5.6 million, which is kind of unbelievable to even make that claim. Now, if we take a look at this, we see that that's where the drop down was, and it made a lower low. So we kind of have on the chart what we call it like a tilted W. So my point is sometimes that bad news sometimes isn't always bad news indefinitely, okay? Now, what you're going to notice is now we kind of see this old channel right here, bottom end of the channel, and we start to poke our head above it. Notice earnings upcoming. Now, I don't think that's interesting because sometimes people will trade, okay, prior to the earnings, maybe thinking that there might be maybe some investors interested on speculating, okay, on what those earnings could be. Now, what we're going to do in closing here in our last trade, we got to do it quick, is we're going to sell the put. Now, we're going to sell the 130 in closing, okay? We're going to sell the 130, okay? We're going to sell the 130. Now, let me just verify. Okay, we're going to sell the 130. Yeah, we're going to sell the 130. And then just for time's sake, what I'm going to do is I'm going to make the lower strike a little bit closer together, okay? And I'm going to make it like, let's say, the 100. Normally, when we actually talk about delta, we're just saying buying a put with a delta of 10 or less. Delta has a dual meaning, probability of the stock being below the strike by a penny, but also the change in the option price over the change in the stock price. We're going to go the 130, 110. This is a stock that has breached the old bottom of the channel. We're wondering, could this snap back to the upside? This is our last trade here today, okay? And I'll leave it right here. Now, remember with what we discussed, all trades, whether stock or options, have risk. Remember that also coming up next, we have Cameron May talking about getting started with options. Stay tuned for that. Also, I want to give you a quick reminder that you can subscribe. You could join us weekly and also actually have those classes right at your fingertips in the playlist. Make sure you also have the coaching schedule as well. That way you can know our up and coming content as well. I want to thank you today for joining us here today and also being a part of our group. You do not have to learn this by yourself. Other people like you are found all throughout the world who want to learn about investing and compound their capital. Now, remember with what we discussed, it was done for example, illustrative purposes only. Today's class was really on, really kind of doing more cash secured puts as well with downside protection. And this has been the class on Investor Master Series, which has been recorded. Subscribe, and then you can actually get that class as well in the playlist. Thank you so much. Stay tuned for Cameron May coming up next. Thank you again, Barb. Take care. Bye-bye.